Hello everyone, my name is Alexi and welcome to my channel. Today we're gonna do my fourth monthly update for April 2020. Let's start with the big news. First, the unemployment is reaching 26 millions in the US, which is absolutely terrifying. Also, 2 days ago the oil price went negative. Two of my companies cut the dividend, it's Delta Airline and CCL, and I'm gonna explain my strategy to start investing into this recession. Let's now go into my phone and see how everything moved. So as you can see on the screen right now, I have about $4,000 invested into this account. And as you see on the middle with the return, I'm about 15.3% down, which is bad, I guess. But if you compare to maybe a month ago, I was about 30% down. So during this period of time, April 2020, we got about, a 15% gain in the market, which is huge. The market went down pretty hard and then came back pretty hard too. So as you know, my strategy is to add $1,000 every month. So we are the fourth month, $4,000 invested, and my portfolio value is about $3,387, which is fine. It's getting better and better every time, so maybe in the future we'll see some green on the screen. But if you don't know, my goal is not to get a positive return in the market. My goal is to get enough dividend to have a safe passive income stream that would go right into my pocket. So let me show you right here into the history and my dividend. I got paid about $15.5 in dividend, and if you see right now, let's go back to my computer. Here you have all the companies that I invested in. A lot of them are in the red. This is completely fine. Some of them are really in the red. The ones that I have the biggest loss are the one with oil, mostly, because we'll talk about this in a second. You see that oil is doing really bad at the moment, but this is fine. You can see that the last few are mostly in positive because of one simple thing. This is the last companies that I actually bought and added to my portfolio. And since the market jumped back about 15%, you can see that a lot of them are in the green. And my older companies are mostly in the red. But let's go now into dividend income. As you can see, in April, I got paid about $5 in dividend, almost $5, but the month is not finished. Still 7 days to go, so we'd probably go higher than March, which was almost $6. But you can see a pretty steady growth, which I'm really happy about. And if we go into the summary, you can see my total annual income is about $180, and this is growing each month because I'm adding new money into the portfolio. And as you can see, here is my growth, as I just told you, about 15.3% down, and my dividend yield, which is pretty high because a lot of those companies, with the price that went really down, the dividend yield then went up so that they keep the same payments. Speaking about payments and dividend, let's go now into the two companies that actually cut the dividend for me. This is the first time ever that I have dividend cuts, and I actually got two this month, so pretty bad. But you'll see this is pretty normal for the two companies that I own. First one being Delta Airlines. If you don't know, well, this is pretty self-explanatory here, but Delta Airline is an airline company. The thing is that due to the crisis we have in the world right now, no planes are allowed to fly, and Delta Airline is no exceptions. So knowing that they cannot fly, they said to the shareholders, well, we are sorry, but we have to cut the dividends. And this is fine. I started investing in this company this month, actually. This is one of my newest holdings. And this is something that was not really surprising for a lot of people, that Delta Airlines suspend the dividends for the simple reasons that they can just not operate with everything that's going on. So am I going to sell the company? Well, actually, I don't think so yet, for a simple reason. I'm about 51% down in Delta Airline, and I think that the company still has a lot of potential. Even though I could just sell everything I have and buy new holdings for new dividend payments, I will still keep Delta Airlines into my portfolio. And same thing with the second company, which is CCL, so Carnival Corporation. If you don't know this company, it's all about cruises, and same thing with airplanes. Cruises cannot operate with everything that's going on, so they had to cut the dividends. But differently to Delta Airlines, they didn't cut the dividends completely. You can see here that the total dividend payments in 2019 were about $2 per share, which is pretty cool. So yeah, if you compare to the total dividends paid in 2020, they actually only paid once the dividend, because we only in the first quarter of 2020, so they only paid about 50 cents. But they already announced that they were going to cut on their dividend. We don't really know yet if they're going to cut all the way to $0 or if they're just going to decrease it. In my opinion, Carnival, as I just said with Delta Airlines, is a pretty good company. And I think that with the big drop they had in value in the market, I actually was able to solidify my position into Carnival quite a bit. And if they can get out of this crisis without any major problem, I think they're just going to do fine in the future. So I am not going to sell Carnival Corporation. Now that I spoke about the two companies that didn't work for me, let's speak about everything that is working out right now. This is my next strategy. As you see in my portfolio right here, actually I have a lot of companies that I actually bought, as you can see on the screen right now. But I changed my strategy to something safer since the times are pretty rough. I started investing in what we call Dividend Aristocrats. If you don't know what a Dividend Aristocrats is, you can go and check out on the top right corner right here my latest video about how to start investing. I speak about the Dividend Aristocrats and why they are important. But if you don't know what it is and you still watch this video, this is completely fine. If you don't know what it is, a Dividend Aristocrats is a select group of 66 S&P 500 stocks with 25 plus years of consecutive dividend increase. This means that during the last 25 years, they didn't cut the dividend once, and even they didn't just keep it, they increased it for 25 years plus. So Dividend Aristocrats are, in my opinion, the safest bet you can have, except of course something like the S&P 500, which is an index fund. But if we speak about mutual fund, I think that Dividend Aristocrats are the way to go right now. Since everything is down, it's actually cheaper to buy these companies that have huge value, in my opinion. So what I did this month is that I bought a lot of companies, and I even bought more companies I already own. So as you can see right here, PepsiCo is a Dividend Aristocrats. AT&T, I believe, too. AbbVie, McDonald's, PPL Corp. These are companies that have immense value right now for the simple reasons that they are dividend aristocrats, so they have a stronger chance of going out of this recession without any problem. So my strategy starting from today will be to buy Dividend Aristocrats stocks until everything goes back to normal, or if there might be some exceptions, of course. If I find a stock that has great value, even though it might be a little bit more volatile, I will still buy it. But I will concentrate myself on buying Dividend Aristocrat stocks because, in my opinion, this is just the way to go right now. As I told you in the preview of this episode, we are going to speak about the oil price. 3 days ago, on Monday, the price went into negative, which means that sellers would have to pay someone that much money to take it off their hands. So this is a pretty strange situation, and I will tell you, the first time I saw this, I didn't understand at first what was going on. But the price of the oil is going down so quickly that a lot of people are actually selling their oil stocks. And the US don't have enough storage for all this oil to get in. So what happens is that companies are actually willing to pay people for them to take the oil off their hands, which I think is an amazing situation. Not amazing in a good point, of course. It is really negative. It means that the price is so low that companies don't even want to have it and they're willing to pay someone to get it off their hands. So just to understand the thing, you have to understand that with everything that's going on in the world right now, with this pandemic and everything that's going on with Saudi Arabia and Russia, the price of the oil just got destroyed by everything. And right now, I think it's actually almost the time for people to start investing in it again since the price is so low, but it would not be a good idea considering the price war that is going on. So in my opinion, oil is a market that is pretty destroyed at the moment, and I will not even touch it more than what I have, because if you don't know, if we go to my dividend stock portfolio, I have a few holdings, as I said before, that is all about oil. Tango Factory, minus 63%. This is absolutely huge. Kinder Morgan also is one. ExxonMobil, minus 30% for both of them. And there is possibilities that they are going to cut the dividends. So we're going to see that in the future. But for now, I think that investing in oil is a bad idea. The graph that you have on the screen right now is about the sectors in which I invest. And you can see that I have about 23% of my portfolio into consumer discretionary, which in my opinion is not the greatest thing to have for the simple reason that this sector, if you don't know, consumer discretionary is the unnecessary part of consuming. So everything that goes from McDonald's to all the fast foods, all the things you buy just for your pleasure, while this goes into this category. So having it at as my biggest holding during a time where everyone is buying on the essentials is not that great. Healthcare, on the other hand, is at 10%, so that's pretty good. What I want to do is increase my shares into technology, but right now I'm going to see which stocks I would probably buy, and consumer staples, which are the essentials. So you see that I have almost 3 times more. I mean, actually, I have 4 times more into the other one that is unnecessary, and the one that is necessary actually got way less. So I'm gonna try to increase this for the next month. If we see right now, this is a graph about my diversification. So every single one of these is a company. You can see that AT&T right now is the biggest holding I have, followed by Walgreens and PepsiCo. So these companies actually love them. They are really solid, and I'm probably gonna follow this path where I'm gonna put strong holdings into stronger companies. But don't forget that for now, my portfolio is at loss with about almost $600 loss. So keep that in mind. Investing in the stock market might be dangerous. Your money can go down. But as always, I am not here to gain value in the market. Of course, if it does, this is great for me. I am here to get paid dividends, because dividends are passive income. This will actually be the next topic of my next video, so subscribe to see it. If you want to see more episodes like this one, you can go click on the top right corner with my playlist about all the monthly updates. If you have any question, let me know in the comments down below. I'm gonna catch you guys next week with a video about compounding of dividends, and I'll see you guys next month for the next monthly update. It was your host Alexi. I hope you enjoyed this video. If you do, leave a like and subscribe to the channel, and I see you guys next week. Bye bye.